I would say that certainly, Jackson Hole and getting a little bit more of the roadmap in place. So I think we now know a lot more than we did just 2 business days ago. Certainly taper, I think, was well telegraphed. Probably the end of the year, we'll see the effects of the storm and the proliferation of the Delta variant, whether that's peaking or not, but maybe tapers even the beginning of 22, and then rate hikes, which I think is what people really care about. That's true tightening, and that seems to be well off. So the market was off to the races on Friday. I would anticipate a little bit more of the same this week.
So what changes are you making to your portfolio after hearing what Fed Chair Powell had to say on Friday?
Sure. Yeah. We're not making any big changes. I mean, we've been fully invested. Very bullish on the market with rates low and staying lower for longer. Perhaps much longer, and the market at about 20 times earnings, which is incredibly compelling given where we are with interest rates. So no big changes, just staying the course.
It's interesting. You seem very bullish on the market's direction and where we go from here. But at the same time, just looking at some of your holdings, you seem like you're much more bullish on one sector that is considered very defensive, and that is utilities. Tell us why you're putting more money to work in the utility sector.
Yeah, absolutely. I think that now that we know a little bit more about what things may look like in the coming months with interest rates, I think that the market's yield, the S&P, is about 1.3%. I think utilities are very interesting. Many trading at less than a market multiple with much higher yields. So companies like Southern Company and Sempra Energy, I think people should take a look at. I think yields above 3%. Growth in dividends of anywhere from 3 to 4%. In the case of Sempra, they've been able to increase their dividend at about an 8% clip in the last 5 years. Certainly, increased relevance as we go forward with electrification of vehicles, and that's a story that will unfold over many years. But I think that it has to be mentioned that at some point, every utility in this country will have a new customer, and that will be electric vehicle owners. So I think that that's kind of an interesting kicker to a very interesting story that I think just gets overlooked. Utilities are not technology. They're not, electric vehicles, which, gather a lot of, mind share. And I think that where we are with the market, knowing that rates are staying low, there's yield is, very interesting.
Quick take on the August jobs report out this Friday.
Yeah, I mean, I think that, Powell and the Fed, made it clear that, we need to make back, pretty much those 6 million jobs that were below, pre-pandemic levels. So we've got a bit of work to do there. And I think that, we will be looking at that more than often, more than we tend to. And I think that that's a big day. I think that perversely, it may be one of those bad news is good news. So a bad jobs report could, send the market higher, which is always a little bit hard to get one's head around, but I think that that's just the way that, things tend to work now with, looking at rates, the Fed as a key to what the market will do.